Good morning. This webinar offers closed captioning. Welcome to the City of Chicago Department of Business Affairs and Consumer Protection's free business education webinar. This webinar is being recorded and will be available at youtube.com/ChicagoBACP. There will be a Q&A session at the end of the presentation. All BACP webinars are a part of the BACP Entrepreneur Certificate Program, which is a free program for anyone interested in starting or growing a business in Chicago. Getting your certificate is as easy as 1, 2, 3. 1, register for the program. 2, attend 6 webinars in 6 months. 3, graduate to get your certificate. Graduating makes you eligible to apply for CIBC Bank's Entrepreneurial Loan Program. Note that you must already be registered for the program to get credit for attending today's webinar. For full details, visit chicago.gov/BACP certificate. Before we go on, I want to share that the BACP announced its next Chicago Small Biz Expo, which will be held on Saturday, September 20th at Malcolm X College. For more information and to register, visit chicago.gov/bizexpo. Views, information, and opinions expressed during this webinar are those of the presenter and are not the official policy or position of the City of Chicago or BACP. The information mentioned will be posted in the chat box. Today's webinar will be Cash Flow and Confidence, Budgeting for Your Business and Life. Turning it over to Score.
Thank you, Chairlyn, and thank you everyone who's on the call today. My name is Stephen Mayer, and I'm the chapter chair of SCORE Chicago. With me is Kyle Deal, one of our volunteers and certified business mentors at SCORE Chicago. In case you're not familiar with SCORE, let me say a couple words of introduction. SCORE is a nationwide network of volunteers like myself, like Kyle. There are about 10,000 of us across the country. In the Chicago area, there are about 70 or 80 of us. All of us have real world experience in the world of business. Many of us have been entrepreneurs. Many of us have worked in professional capacities or at high levels of major corporations. And what we choose to do is to give back, to help small business people and aspiring entrepreneurs get off the ground and grow. Sometimes we can share our own experiences with you, experiences of other clients we've mentored, what we've learned along the way, including hard knocks and life lessons. So, SCORE is here to help you as an aspiring entrepreneur or small business person. And we offer to do that in one of two ways. One is education. And so we do webinars like the one you have signed up for that you're about to hear this morning. They're on a wide variety of subjects. This morning is really about budgeting in your personal life as well as for your small business. We just completed a series of webinars on how to build a business plan. We do webinars on how to build a website, all the things that you may need to know to get your business off the ground and growing. The other thing we offer, and it's very important, is one-on-one mentoring. Volunteers like Kyle, like myself, meet with clients on a free and confidential basis to hear your specific issues, where you are in your entrepreneurial journey, what issues you're facing, what questions you have, and we try to help you sort those things through. I know that being an entrepreneur sometimes involves wearing many hats. It's sometimes confusing, it's sometimes lonely, and we're here to help you, to be your guide through that whole process. So whether you sign up for webinars like today's, or whether you sign up for mentoring, go to score.org/Chicago, and you'll find opportunities for both there. Today's webinar, today's speaker, as I mentioned, it's about budgeting, and with us is Kyle Deal. He's been a SCORE mentor for a couple of years. He's met with many clients already, not only on the subject of budgeting, but as I said before, whatever happens to be on their mind as they think about starting a small business or growing a small business that they already have up and running. Kyle is a subject matter expert in the subject of budgeting. He's a certified financial planner, and so I'm sure he's going to share a lot of good information with you. You will get a copy of this presentation from BACP. We'll also take your questions. So we look forward to hearing from you, answering as many of your questions as we can. If you have really specific questions, that might be the subject of signing up for a mentor. And again, I encourage you to do that. We're here to help. And so without further ado, I'll turn it over to Kyle. Thank you.
Thank you, Stephen. Before we jump in, I do want to note that today's webinar is mostly geared towards individuals who are thinking about starting their own business or are really just in the beginning stages of starting their own business. If you're on today's call and have a more established business, I would still encourage you to wait to the end. My speaking portion of this will probably only be 20 to 30 minutes. I've left plenty of time for Q&A, and I'm more than happy to discuss any specific questions you have about your own business. With that being said, let's get started. This isn't working. Let's try that again. There we go. So a little bit about me before we get into the budgeting. I've been in the industry for over a decade now, worked with hundreds of individuals and small businesses to help them achieve their financial goals and ultimately achieve financial independence. Which is just to say I've been doing this a long time. I've seen a lot of different things. And so if it's not covered in today's webinar, feel free to ask me some questions about your business. Likely I've seen a scenario where I could give you some guidance. And if not, I could help you introduce you to someone who can. So for today's agenda, we're going to start with how to put together a budget for your personal finances, understanding your budget and what your annual expenses actually are, and then calculating how much you would actually need to make in your business before you quit your day job and work full-time in your business. From there, we're then going to jump into budgeting for your business, understanding your business cash flows, the fixed and variable costs that go into those cash flows, common pitfalls to avoid, and some strategies you should use to plan ahead. So budgeting for your personal finances. There are a lot of different tools out there, whether it's Mint or Rocket Mortgage has a good tool as well that you could use to better understand your personal expenses and get organized. Personally, I've found over the years that many individuals find the information you could get from those tools a little overwhelming. Sometimes too much detail can be a bad thing. When you're just getting started, you could get overwhelmed by all the different numbers and the details. So for today, I'm just going to keep it simple, focus on what you can do to just really create a budget in Excel at a high level to understand your revenues and expenses for your personal finances. The goal is really just, quite frankly, to keep it simple and get you started on the right path. So here we are. You could see inflows on a monthly basis. Most people probably joining today's call really just have a W-2 job, earning a paycheck. Some individuals might be a hairstylist or work other jobs where they receive money via Venmo or Zelle. Hopefully you're not getting checks, but if you are, cash checks for your business. You could sum up your total inflows on a monthly basis. I would encourage you to do this for the whole year. For the sake of today's example, I only did 3 months, but you're going to want to do this on an annual basis so you can see your inflows and outflows throughout the year. Particularly your outflows might be lumpy as you might have a tax payment or a tax refund come in April. Then we have the outflows. You're probably paying rent or mortgage, unless you're lucky enough to still be at home and avoiding those costs. You probably have some utility expenses. Then we have credit card expenses. I really just lump most discretionary expenses in here to the credit card expenses to keep it simple for you. I don't think you need to line item out every grocery bill or coffee payment or things of that nature. You might have some student loans, maybe perhaps a car loan, as well as a phone bill. Really, when organizing this, I would recommend looking at your checking account, and you could just see the outflows from your checking account on a monthly basis and create line items here so you could see where the money's going. And then you could simply subtract the total outflows from how much you're making to get your net cash flow on a monthly basis to see how much you're saving. Now that we've ballparked your total annual expenses, for this example, we're going to use 40,200 based off the previous Excel file. From there, that's not how much you have to make to be able to quit your day job. You have to take into consideration the Social Security taxes you're going to pay, Medicare taxes, federal income taxes, as well as Illinois state taxes, assuming everyone listening today is in the state of Illinois. Now, I would note on here, the only non-fixed tax expense is going to be the federal income tax bracket. Those tend to be more marginal rates. I use 20% here to be conservative. Depending on your specific financial situation, that number could be higher or lower, but that's just a really good benchmark to get us started today. So when we include all those taxes, assuming your total annual expenses are in the ballpark of 40,000, you would need about 67,000 to quit your day job and start working in your business. That's how much you would need to be able to take out of your business in terms of cash flow. But that does not include any kind of healthcare benefits you might need, disability insurance you might need, depending on what you do and how you feel about covering that risk. And when we add those costs in as well, now healthcare benefits could vary depending on how much you want to pay for healthcare. Once again, I was a little bit more on the conservative side here with my estimates, but assuming you get good healthcare insurance, your total income need could be in the ballpark of 78,000 from your business. Now, that's a lot of numbers. Some of you might be tuning out by now and overwhelmed by the math that we're hitting you with on this webinar. But here's another way of thinking about it to really break it down. If you're able to calculate your current expenses, if you're able to get to this point where it's 40,200, you could think about it as you have this income need and you know you keep about 60% of that income to cover your current expenses. And so really what you could do is you could just take your current expenses and divide it by the percent you keep to arrive at your income need. I'm going to pause here in case we're getting hit with questions. Feel free to jump in. Another thing I would add is if you could get to this point where you know what your current expenses are on an annual basis, you could feel free to reach out to me or another SCORE mentor, and it would be relatively easy for us to help you get to the point of understanding what you would need to earn in a business to get to the tax equivalent.
I'd point out, Kyle, and to all of our listeners today on the webinar, that I've mentored a lot of clients who may be working in a job now that they like or don't like for whatever reason. They might have a side gig or a side hustle that they think they could turn into a business, but very few of them do consider what you're pointing out here, and that is, you know, when you're working in a company job, they cover most of yours, or at least half of your Social Security payments. They're taking out of your paycheck withholding taxes. So you're seeing the net total, perhaps, what you take home each week, forgetting perhaps what they're covering for you. As a small business owner, however, you've got to cover yourself. And so this idea of having to, I call it plus up, you know, your earnings to cover these additional expenses, which are not optional. Taxes and Social Security, we don't, you know, as they say, death and taxes are two things in life that are non-negotiable. It's very important that there's a starting point. You know, yes, you figure what you need to live on, but then what you really have to earn so that after taxes, you have that much money, at least that much money.
Yeah.
Let me
I
see
saw the
if,
question. I'm not sure what you mean by EE and ER. Not be. Yeah,
oh,
so it aggregates the employee and employer portion of Social Security and Medicare. So yes, like, and what Stephen was alluding to is right now the employer covers half of Social Security and Medicare. The percentages you see here aggregate those together. So typically Social Security, an employee pays 6.2%, an employer pays 6.2%. For simplicity's sake, I just aggregated it here to 12.4%. But you are correct. There's an employee and an employer side of Social Security and Medicare that when you're running your own business, you have to pay both sides of that. And another, I think, thought that occurs to me as Stephen was talking is that if you're working a W-2 job right now, your company is sending checks to the government for you to cover your taxes. Once you start your own business, you'll likely want to be paying quarterly estimated tax payments so that you're paying enough of your taxes to avoid tax penalties come April. And so that's another kind of administrative item that I often see fall through the crack, as it's something that's already being done for you that you might not realize you need to now be doing yourself as you start your own business.
do we have any other questions at this point before moving on? Just figuring out how much you need to earn doing business for yourself or being in business for yourself to make as much or more as you might be making in your current corporate job?
I don't see any other questions. I think we're good to move on.
Okay.
Cool. So now that we have a good idea of how to get to a point of what you would need to quit your job to start full time, another thing to think about is now you're starting your business. What are some of the costs to start your business? Now, I would take this chart with a grain of salt, as many people who come to us through SCORE do already kind of have a side gig. And so they're not really in technically year one of their business. They might really be in year 3. But if you're on today with, no business having been started and really just in the ideation phase of a business, I would really keep in mind that there are costs to getting your business up and running. And this is research put together by another firm, kind of just showing the costs that they've seen through people that they work with to get a business up and going in the first year. And it ends up being a lot more expensive than you might think, with only 3.7% of businesses being able to start with less than $50,000. Especially depending on what your business does and what you're trying to do, it could end up being a lot more expensive. Now, where do some of those expenses come from? One of those being taxes. We've touched on that already. Another being insurance. And this might not just be personal insurance. Depending on what your business does, a lot of times you might need certain kinds of business insurance. If you have a more brick and mortar or starting a shop, you might have payroll and employees you need. Some businesses need equipment to get up and running. Inventory is a big one. And if you plan on having inventory in your business, that could be one of the largest cost centers, and quite frankly, one of the largest variable costs for your business, as tariffs and other items and inflation could end up impacting the cost of your inventory and the business expenses overall. Utilities, which seems kind of high, that's going to fluctuate drastically depending on the business and if you need a location. And then the interesting thing here is that marketing ends up being one of the lowest costs of starting a business in the first year. And I think it's important to point that out. Occasionally people come to us and they want to spend a lot of money on marketing to get their business up and running. And usually that's not the best way to get a business started, is by spending a lot on marketing. Now, there are exceptions to every rule, and I don't want to say that's never a good idea, but oftentimes you want to kind of just start slow, have a proof of concept, and get buy-in from local community or your target demographic before you start really spending and ramping up on marketing. Someone put in the chat that those expenses differ from profit to nonprofit. So that information was specifically just for profit businesses, I believe. I would say that a number of nonprofits might have similar situations, though, when it comes to locations and other items. As they get started, nonprofits might be able to leverage a little bit more volunteer work than maybe a for-profit corporation would, right? So now let's talk a little bit about creating a budget for your business. There's no one size fits all budget for small businesses in general. Every business is going to be unique. And so what we're really just going to talk about today at a high level is how to create a budget in a way that's going to be most efficient for you. So similar to your personal finances, you're going to want to keep track of your monthly revenues to understand how much money your business is making. And this, once again, can be done very simply in Google Sheets or Excel, or by hand if you want to do it that way, as a way of tracking how much revenue is coming into your business. And I would also add here that I would highly, highly recommend setting up a separate checking account for your business, separate of your personal finances, because that will make it much easier for you to understand what the revenues for your business were versus maybe revenues if you're still working part-time or full-time outside of the business. Similarly, I would also recommend having a separate credit card or expense center for the business that isn't your personal card. That way you could also track expenses for the business separate from your personal expenses. Now, I understand for tax purposes, there might be a reason to run somewhat otherwise might be considered personal expenses through your business, but you are going to want to keep track of those separately from just a business and profitability standpoint, because, I mean, let's use a phone bill, for example. You might decide to run your phone bill through your business as a business expense. So from a tax standpoint, it's tax deductible, but it's not like your phone bill cost is going to go away with or without this business. So it's like, while it's a business expense, it's not a true expense of the business. And so you want to be able to track those separately when really trying to dive into how profitable your business is. You also want to think about separating out your fixed costs from your variable costs, which will help you better plan ahead for your business and understand how to set up an emergency fund for your business. So some variable costs you'll want to separate out separately. For those just getting started, there might be some employee wages, but the biggest variable costs are going to be any kind of inventory you have. If you take on debt, that's variable interest rate debt for the business, that would be a variable cost as well. Any materials or utility costs, things of those nature, you'll want to track separately, as those could also change throughout the season and throughout the year, and aren't just going to be consistent from month to month. So you'll have to anticipate those ahead of time from your cash flow. And then from there, you could go through and think that you could calculate your expected profits from month to month and how much excess cash flow you might have to either grow your business or pay yourself. And I can't stress this last part enough, but you should check in with your budget at minimum monthly. I know this graphic here says quarterly, but when you're really just getting started and trying to understand your business cash flows, it's important to create habits where you're tracking this on a monthly basis. Any specific questions about any of that? I saw some things come through the chat, but.
Yeah, I'll seed the conversation with a couple of questions. Could you expand on the difference between what are fixed costs and what are variable costs?
Sure. I think the easiest way to think about it is a fixed cost is going to be something contractually you know is not going to change. Think of like rent, you know, over the next 12 months, you signed a contract with your landlord, your rent's not going to change. So people sign longer contracts, 24, 48 months, things of that nature. That would be more of a fixed cost. Salary is another fixed cost. You've agreed to pay your employees a certain wage. Now, obviously, those things can change, but you have more discretion on some of those changes than a variable cost could be something like your monthly electricity bill. You know, you're not going to have control over how much you're paying on utilities from month to month. That's going to be a little bit more variable. Inventory could be a widely variable cost in terms of importing inventory from China or India or overseas in general, with not even the tariffs set aside, just those costs can change on a monthly basis. They're also variable in terms of if you buy more in bulk, usually you get a bulk discount, things of those nature. Um, that as you scale, you could bring down some of those variable costs in all likelihood as well.
I would add, just so our attendees understand, that variable costs are things like the cost of goods. So if you're selling shoes, for example, if you sell 100 pair of shoes and you sell them for $100, but it costs you $50, you're going to have 100 times 100 in revenue and 100 times 50 in cost. But if you grow the business and you next month sell 200 pairs, not only will your revenues go up, but your cost of goods will go up. I think that's what you're referring to when you call it inventory.
Sure.
And
Well,
I
hopefully
mean,
as you
that's a
scale,
natural and a good thing. It's not to be
yeah,
avoided. Maybe you can
yeah,
bring down the unit costs as you scale, you know, getting a discount, but you're always going to have, those are the kind of costs that vary with sales. So the more you sell, the more the costs, your internal costs will go up as well.
yeah. No, that's a good point and a good way of clarifying that for anyone. Listen,
Um, I would also ask a question, Kyle. Um, Relevant to the previous slide too, where you were showing the different kinds of costs. You included things like equipment and location, you know, real estate, if you've got a brick and mortar business. Well, what if you're a service business that really doesn't have to invest in either a brick and mortar location or a lot of, you know, manufacturing type of equipment? You're not selling a product, but maybe you're a consultant, or maybe you're a, you know, a massage parlor and you do massage, you know, you go to your clients and give them massages in their home. In that case, you're not really talking about a lot of equipment like machinery. Um, so still, I mean, is that something to take into account?
I just think your costs are going to be a lot less. And if you're, I mean, I would think about how you could keep your costs low in that nature if you could avoid a brick and mortar and things and still have a successful business, especially as you're just getting started. Keeping your expenses as low as possible is going to help you have a successful business if you can manage to do that in any which way. I'm not sure if I'm answering your question.
Yeah, you are. I mean, obviously, people have to tailor that to their own situation. Uh, we have a couple. I'm glad to see we have a couple of other questions coming in now from the audience, if you don't mind taking them.
Yeah, go ahead.
One person asked the question, how do you go about paying yourself through your business?
Yeah,
Good question.
that's a good question. So by going through this exercise and understanding your costs, you could understand how profitable your business is. And then first, before you pay yourself, I would highly recommend setting aside some emergency fund of 3 to 6 months expenses. So that way, if your business hits a lull, if you're in kind of more of a cyclical business that might pick up during the holidays, or maybe you're only pick up during the summer because you're a boating business. That was a business that I talked to earlier this year, actually. That's going to help you scale back up and really sustain the business during those slow months, because some of the expenses aren't going to go away just if you slow down. And it's important to plan ahead and know, like, you run a boating business, you probably know like December, January, February, March are going to be slow seasons for you. But you still, you could look at your fixed costs and understand like, oh, I still have to pay this debt on this boat on a monthly payments. I need to set aside cash for that. Things of that nature. You're still going to have those fixed costs. And so once you kind of understand what the annual business looks like and what you might need to set aside, you could then have a better idea how much to pay yourself. And like I said, I would highly recommend setting aside an emergency fund as well from your business. And from there, you could start paying yourself from the business.
We have another question, Kyle. Is it normal to have a first-year business have a net loss with all the startup expenses?
Yes. It happens, especially a taxable loss is very common because you might have an accountant who is utilizing strategies to have a taxable loss. But as you're getting up and running, we do frequently see that. That's really just usually the business owner is investing their cash flow into the business to get up and running. I would say if you're continuing to be in business and noticing a loss, that might be concerning. I would also add that like if you're taking a loss on your tax return, that is not the same thing as your business actually having a loss. And that's where it's important to also be doing some budgeting separate of what you're doing for taxes to better understand your business profitability. Did that make sense, Stephen? I'm not sure if you're talking.
Yeah, it does to me. So we're getting these questions now. Do you want to take them now or hold them towards the end?
We don't have a lot left, and quite frankly, these last couple slides already talked through a lot. So it should
Okay,
probably
let's
take about
wrap it up and then
3
we'll
minutes
take
here
more
to get through these
questions.
next couple slides. So next one, common pitfalls to avoid. I've kind of hit on all of these at this point. But the big one, lack of tracking, monitoring your expenses, and understanding your business. Underestimating your expenses is another big one. As people get up and running, especially as people pivot to having a brick and mortar, moving into a physical space always costs, I would say, like 20 to 30% more than people generally expect. And so I would plan ahead for that. Ignoring an emergency fund. There's going to be cyclicality in businesses in any business cycle, and planning ahead and having some cash set aside for those inevitable market pullbacks is really going to help your business sustain itself over the long run. Inadequate debt management, another big one. I've seen people take on credit card debt to start their business. That's generally the worst kind of debt you could take on in terms of interest rates and what you're paying on that debt. And there's oftentimes better tools available to people other than credit card debt to get their business up and running. And then impulsive spending, as well as failure to adjust and adapt for the business overall as the market changes are other reasons businesses commonly fail. The biggest one that would probably be hard to prepare for as you're listening is just adjusting and adapting to any kind of market changes. That's where perhaps a SCORE mentor could help you think through what you're not thinking of for your business. And then this is the last slide. So planning ahead, put aside some money in an emergency fund. We've said that a lot already. I cannot stress that how important that is enough. Something to think through is investing back in your business versus paying yourself. Obviously you need to live your life and put food on the table, but it's important to think through kind of what your long-term goals of your business are, and does it make sense to put money back in your business to grow it? And that's something, once again, a mentor could help talk you through the decision tree there. There isn't really necessarily a right or wrong answer here. It's just more importantly, what you want to get out of your business and your life. Really, it's important to keep some clean books, understand the difference between your business and personal expenses, as well as your taxable income versus your business income and profits, because those don't always align to the same thing. And then as your business continues to grow, think about tools available to you, whether that's a SCORE mentor, SBA loans, there's a lot of different loans you could get through the SBA, like a 7A loan for inventory, and things of that nature that are going to be at a lower interest rate than you're going to get through a credit card or something like that. And then, yeah, if you're on today's webinar, you're already starting along the right path. Continue to attend webinars and learn. There's a lot of different information out there, a lot of different opinions. There's not necessarily always right or wrong answers. It's what's going to work best for you and your business. As I said at the start of this, maybe Rocket Money or Mint is going to end up being a great tool for you to get organized on your budget. And maybe the Excel file is going to help you kind of get a clear, concise answer on how much you're spending and saving. There's really no right or wrong answer. It's about understanding yourself, how you think about numbers, how you learn, and what's going to get you to the right path along your financial journey. With that, let's dig into some more of these questions, Stephen.
Thank you, Kyle. We do have some more questions, and some of them you touched on, some may be new, but one person asked, Felicia asked, can you include your own salary as part of your costs when you're doing the projections for your business?
Yes, you should. That's a good question that I didn't really touch on. But yes, you absolutely should touch on your own salary. That was more in the variable cost center because what you're pulling for the business in theory is variable. You could take no salary as part of it, but zero salary, depending on your personal situation, might not actually be a choice. And if kind of where we started, you kind of have this idea of what you absolutely need to earn from your business to potentially support yourself and your family. I would absolutely include that as a business expense on a monthly basis. But that is variable because obviously you could change how much you're paying yourself.
I have a follow-up question, which I've been asked before. Do you pay yourself on a monthly basis, or can you wait until the end of the year and see how much profit there is in the business and pay yourself in one lump sum?
So you could do either or. There is no right answer. Some people might need the cash flow on a monthly basis, and if you absolutely need the money, I mean, take it. It's better than going into credit card debt or not paying your rent or your bills or things of that nature. I would take the money monthly if you need it. With that being said, it could be more beneficial to you to wait to the end of the year to take the money and give your business more flexibility, right? Especially if something happens in your business where now you need cash. By waiting to pay yourself, you're going to be able to build a larger emergency fund for your business and have more flexibility in terms of cash flow throughout the year.
Latanya asks, if I have no income yet, what's the first step to creating a safety net without feeling overwhelmed? Do you want to address that, Kyle?
Sure. I'm assuming there's no business income yet. So assuming you have like a job or some income source, I would recommend setting aside a personal emergency fund as well, so you're not concerned about taking this leap to start the business. And that would just be, as we kind of covered in the first couple of slides, is understanding how much you're saving each month and then really setting that money aside in cash so that you have this backstop of an emergency fund for yourself and your life in case there are some issues with the business. And that could also be used, that money could be used to invest in the business to some extent, as well as to act as an emergency fund for your business as well. When you're just getting started, a lot of those finances do tend to get a little intermingled to get your business off the ground, and that's okay. It's just important to keep track of them, understand your cash flows of your business, and make sure you're not living or spending outside your means to get your business up and going.
Jocelyn asked the question, are startup funds like the SBA 7A available for startups versus, I assume she means versus an established business? Can a startup qualify for an SBA loan? Do you know the answer to that?
Depends on the kind of SBA loan. Um, I actually don't know if they could qualify for 7A because 7A is typically used for inventory. I think, I actually don't know off the top of my head. I'd have to look into that. That's a good question. I think I know the answer, but do you know the answer off the top of your head, Steve?
I don't want to say definitively
No, I
because
thought
I
you had to be
could
in business for years.
venture a guess and it might
Yeah.
not be true. But I can tell you that we have good contacts with the SBA and we can ask on your behalf. I can also let you know that the SBA has a program coming up, has a lot of programs coming up soon, but we can find out for you for sure. Another person comments, it's not really a question. Juliana asks, I've seen where business owners pay themselves in the form of a distribution. Can you explain what that is and how it's reported as income on your tax returns?
I mean, I'm not exactly sure what you're referring to and how the business is structured. There are different ways to distribute income from a business. Generally for everyone joining today who's the sole business owner, you're going to distribute income in a way that's taxable income to you. So you're going to pay Social Security and Medicare taxes. There are some unique things you could do as your business gets larger. You have employees and other things of that nature, but um, to avoid getting too technical and potentially saying something wrong. Um, Distributions are typically just a way of distributing income from the business, and it's just taxable income like anything else.
Yeah, I think that, I mean, I'll venture a guess here. Maybe I shouldn't, on shaky ground, but I think when people speak about a distribution, they are talking more about that year-end payout from accumulated profits. They may have taken a small salary, on a monthly basis as living expenses for themselves. But with the expectation and hope that the business will do better. And if sure enough, come the end of the year, the business does better, or maybe even on a quarterly basis, they track it month by month and they see profits in excess of what they expected, they might pay themselves a distribution. In either case, whether it's a monthly payment of salary or distribution at year end, it is reportable as taxes.
Yeah, and that's a good point. I didn't think about that, but a lot of businesses do take a smaller salary throughout the year and then they'll meet with their accountant and their accountant will tell them like you have to distribute this much from the business so you don't pay corporate taxes as well as personal income taxes on it. So they'll distribute income to themselves and other owners to avoid getting double taxed on said income. So an accountant will sit down and figure out what their taxable income of the business might be and what they would have to distribute as payroll income to avoid getting taxed at the business level for that income.
I'm not sure I understand this question. It comes from Norma. Maybe you do, Kyle. She asks, what do you think about a partnership for private practice for mental health services in regards to own salary?
Versus like an LLC, I'm guessing, or
I guess for a partnership versus a sole,
sole
a sole
proprietorship.
proprietorship.
I guess I don't know enough about that industry to comment on why maybe partnering with other individuals versus doing it alone would be better for you. You do, I mean, obviously, the larger a company gets, you do get scalability of certain back end office support as well as maybe marketing. But then you also have partners you have to enjoy working with and do business with. So there's some give and take with that. I hope that answered that question, but
Yeah, I would
something
I would
else.
also add to that in any partnership, you ought to think through very carefully the different roles of each partner. And there probably should be a written partner agreement where you clarify how each partner is going to be paid, and God forbid the partnership breaks up at some point or somebody, moves away, how you pay out partners.
Or if someone gets divorced, how you might pay out the divorcee instead of them getting equity in the company. You could do that in a contract as well.
We have a question from Dominique. Are there SBA loans available for nonprofits?
Yeah, so SBA loans typically aren't geared towards like profit, nonprofit. It's mostly tied to like what your business is doing and what you're attaining with said loan. So if you have a business plan put together, and a way to show cash flow to pay back the loan, they will give you, you could get a loan for a nonprofit. It really just, the hard thing with being a nonprofit is showing the revenues, right? That are going to be consistent in a way that someone will give you a loan.
I want to thank Bruce, who's put in the chat a comment that I think is there for everyone. He answers, yes, a startup business can get an SBA 7A loan, but there are specific requirements, including demonstrating sufficient personal equity, providing a personal guarantee, proving the ability to repay the loan. I would just add to that some more clarification. The SBA generally does not make loans itself. It guarantees loans that banks make. So if you look on the SBA website, you will find a large number of banks. Some of those are partner banks with SCORE here in Chicago. We can put you in touch with them, but you can talk to your banker about an SBA guaranteed loan. The loan is still made by the bank, but the SBA comes in and guarantees that loan so that the bank might be willing to make an SBA guaranteed loan when they wouldn't be willing to make one without the SBA's help. It takes some of the risk away for the bank, and so they're more willing to make a loan. So that's important to understand.
Yeah, thank you for clarifying that. And the other reason you might want to get an SBA versus a normal bank loan is you typically, not always, but typically can get lower interest rates through an SBA guaranteed loan because, as Stephen mentioned, the bank is taking on less risk.
This is a question from Felicia. Can you answer or define, quote, how does your business make money? I think that's a larger question than just accounting and budgeting. I think, when you write a business plan for your business, and forgive me, Kyle, if I'm stepping in here.
Oh, go
but
ahead.
I think it is a larger question. It's not just about budgeting. The financial projections and budgeting are an important part of a business plan. But if you work with a SCORE mentor, they'll probably take you down a path starting with a business plan. And you have to have a pretty clear idea. And you say, how does your business make money? What are you selling? Who are you selling it to? How much are they going to pay you? Why are they going to buy from you versus any number of other competitive options, alternatives out there? That's all part of a business plan, and it addresses the question, how does your business make money? I mean,
sorry, I thought you were done.
Well, the simple answer is you
Yeah.
sell more than you spend in the business. But go ahead, Kyle.
I just noticed, I think it was Felicia put in the chat as a non-for-profit. And so just to clarify, maybe there's some confusion. Nonprofits can still charge customers for their services. The idea is just that they're not aiming to make a profit, so they're typically charging maybe less than they otherwise could have. And they distribute their revenue either to the employees in terms of income, but it's just the idea is that they're not going to be a profitable business. Now, there are other nonprofits, like let's use SCORE as an example, that don't really have much in the way of revenue streams. And the only other way you could get money from your business is if you're getting some kind of grant for the government, or you're getting money through donations from the local community, which means you're calling on businesses to try and get them to donate to your cause. Religious organizations are another example of nonprofits that don't necessarily charge you to go to church or temple. They collect donations, right? And that's another way you could get money for your business or cause rather, and just have employees and pay income.
Yeah, we encourage nonprofits to go, people who want to start a nonprofit, to go through the same kind of business planning process. You still are going to have expenses, whether that's staff or the programs you provide. If you're, helping feed people who are facing hunger, if you're helping to educate youth in the community, whatever kind of nonprofit it is, you're going to have costs, as any business does, to provide your services, to hire people to provide your services. And you may not be selling those services per se, but you are going to need revenue. And as Kyle points out, whether it comes from government grants that you win or from donations from individuals or organizations that share in your mission, they believe in your cause, et cetera, and they want to see you succeed and have those positive effects in the community. There's still going to need to be income, and there's still going to be expenses. And even a nonprofit should think about how realistic that is. Do we have any other questions from the audience? Again, Bruce, and thank you for, and now I know who you are, Bruce. He points out that nonprofits do need a business plan, as we were just discussing. They do need a plan to secure funding from donors and foundations, moreover, to attract board members and volunteers, et cetera. And so a business plan for a nonprofit would clarify those goals and identify the opportunities and the risks. It would outline how the nonprofit works operationally. And so on a long-term basis, even a nonprofit, is financially sustainable. The purpose may not be to make money. It may be to have positive impact in the community, but it still needs to function. It still needs to cover its expenses and do its work in the community. So thank you, Bruce.
Well, do you see any more questions, Stephen? I'm just looking both at the chat and the Q&A as well.
I don't, not real questions.
Okay, we'll give everyone one more minute to put some questions in. Getting lots
Thanks,
of
Jerry.
Yeah, no worries. Getting lots of thank yous. Great webinar, great information as always. Absolutely. Thank you, everyone. It looks like that is all the questions we have. Kyle, thank you so much for all this great information, and you're taking the time out of your busy schedule. Stephen, thank you as always. SCORE is such a great partner of ours. Wishing everyone a great, safe, and happy weekend. Have a good one, everyone. Thank you.
Have a good one.
Thank
for
you,
joining.
Kyle. Thank you, Jerry. And please, if you want more, come to score.org/Chicago. Good weekend to all of you. Thanks for your participation.